You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. We're back this week with my co-founder, Chase, and we are joined by CJ Konstantinos. He is the host of the My Two Sats podcast, as well as the founder of People's Reserve. Welcome, CJ.
Hey, guys. Thanks for having me. It's great to be here.
Yeah, super excited to dig into this conversation. Just for listeners, we're going to talk Bitcoin-backed bonds and all of the implications of that, and Bitcoin as pristine collateral. So we're really going to dig into the details here. So I think a good place to start is, CJ, if you could just speak to the size of today's global bond market.
So right now, we're looking at a pretty much $300 trillion fixed income problem. And the problem in that marketplace is that the real rate of return is negative. So for those listeners who don't know what a real rate of return is, what you simply do is you take the yield you're getting on whatever debt instrument you hold, and you subtract the real rate of inflation from that APY. And if you get a positive number, then you've made a good decision, because at the end of it, when you take into account price increases, you're going to be able to buy more things at the maturation of that note. But if the number is negative, like if you're getting 5% on a US Treasury bill and the real rate of inflation is 10%, you're getting a negative 5% return, which means at the end of the year, you're going to be able to buy 5% less stuff. And what happens is when the interest rate is negative, you should be spending and investing your money as you get it. You shouldn't be putting it into a savings vehicle that doesn't allow you to buy more stuff to increase your purchasing power, because that's really what it comes down to. Nominal numbers, which are the numbers on the computer screen. And if you look at those numbers, everything is going up and to the right and it looks great. But real numbers take into account price increases. And if your real numbers are going down while your nominal numbers are going up, you get a false signal. You get a false signal of economic growth. You get a false signal of profit, when in reality, your balance sheet is truly declining. So this is a multi-$100 trillion issue. And with Michael Saylor and MicroStrategy, we're just starting to see, yes, with Bitcoin, we've re-engineered money. And now we're moving to the next step of this evolution, which is integrating Bitcoin into debt products. And we are going to re-engineer debt.
Yeah, and I think a lot of Bitcoiners are familiar with the classic 60-40 portfolio, and we've been targeting this 40% bond portfolio as something that maybe spot Bitcoin would come to eat up eventually. But we're not exactly seeing that. What we're seeing is more of this Bitcoin-backed bond, like you just mentioned with MicroStrategy, with the best performing corporate bond. So let's go there. Why don't you explain how a MicroStrategy corporate bond gives a bondholder exposure to Bitcoin's price appreciation, but limits the downside risk?
Yeah, and before I even go into that, I would like to first say that if you're on the personal level, one of the best things you can do is add Bitcoin to your balance sheet. And especially if it's your savings vehicle, because if you're saving in Bitcoin, the volatility doesn't matter. Your low time preference, and you're going to get a 60% CAGR, or even if that gets cut in half and you have 30% CAGR, it's going to outperform everything. And that concentration of Bitcoin in your portfolio is going to allow for the diversification decisions you make to underperform. So on a personal level, it kind of makes sense to just add Bitcoin to your balance sheet. But now we're talking about businesses and corporations, and the dynamic changes. It's one thing for an insurance company to take Bitcoin and put it on their balance sheet, and God forbid a hurricane hits or a catastrophe happens. But what happens if that's in the middle of a bear market and the amount of you invested into Bitcoin happens to be down 40 or 50%? Now we know that's only temporary, right? Bitcoin's price can go down 40, 50% in 5 days very easily, but it's never going to go down that much in 5 years. So for the personal level, you can just wait the 5 years and you're going to end up in a better, stronger position. But at a company level, you might need to make a business decision, or you might want to take advantage of a business opportunity. And if it happens to fall upon a time where Bitcoin's in a bear market, you now can't act on that opportunity because you would be like the banks. You would be locking in losses, these mark-to-market losses, if you had to sell that collateral. If the banks couldn't take their treasuries and borrow against them at par, they would have had to lock in losses. So that's why the Fed created the bank term funding program, so that they could bring those losses to a borrower, hide those losses so that it didn't affect their balance sheet and actually become a realized loss. And that's what we have here in Bitcoin. We have the opportunity to combine Bitcoin with traditional debt products, which limit downside volatility, limit downside risk, enabling businesses to write liabilities against that debt instrument versus the Bitcoin asset on the balance sheet. And then also capping the upside. That's the price you pay, right? You still don't get the 30 or 60% CAGR 1-to-1 for Bitcoin. Your upside is capped. But Bitcoin performs at such a rate that the upside that's being produced, when we went back to the Treasury example, where we were at 5% on a T-bill, 10% real inflation, negative 5%, Bitcoin's potential in this product is for 10, 20, 30, 40, 50% APY. And this is why we see the demand that we see for MicroStrategy. Anybody that's looking at this and saying this isn't sustainable doesn't understand how prices work, because interest rates are the price of money. And Michael Saylor is borrowing money at 0%. Plus, the convertibility premium is at 55%. So this price tells you right off the bat, there are large amounts of demand for this product. If there weren't, the interest rate would be higher in order to attract demand. The convert premium would be lower in order to attract demand. So we can look at that price signal to understand that, yeah, this multi-$100 trillion marketplace, they need these types of tools. They need the next evolution of not just money to plug into their business plans, but of debt, of re-engineered debt that gives them downside protection, but then upside exposure to the best performing asset in the world.
So you touched on it a bit, but I just want to take this one out separately. Michael Saylor said recently on an earnings call for MicroStrategy that those bonds have actually outperformed Bitcoin itself. So can you break that down, how that's even possible?
Yeah, so this is where the premium to the NAV comes into play, where I believe right now MicroStrategy is trading around a 3x premium to NAV, meaning the natural asset value of their balance sheet is less than what the stock is being valued at. And they call that a premium. But when you compare the premium that they trade at relative to other big companies in the stock market, it's very low. So the way that convertibility bond has been outperforming is that they are buying the shares at a 55% convert premium. So when you convert, you're not getting the share price of when you lent the money. You're getting that share price plus the convert premium. But the share price is appreciating so much because the value of Bitcoin is appreciating so much. So as the value of Bitcoin goes up, the natural asset value of the balance sheet goes up, which then pushes the share price up because it's matching that 2 to 3x premium to NAV. But that premium, I believe, is going to continue to grow, which makes MicroStrategy investable, which makes the business plan feasible. And I believe it's going to grow because they'll find different ways to incorporate the products that they're building for these different problems that certain companies are facing and other ones don't. Like we mentioned before, on the personal level, the Bitcoin bond might not really do that much for a singular person. They'd be better off just adding Bitcoin to their balance sheet. But that singular person who's running a business can't deal with the downside volatility. Therefore, a Bitcoin bond still gives you price exposure to the best performing asset in the world and still gives you positive real rates of return, but it eliminates that downside risk. And in the case of an insurance company, when you're writing liabilities against that asset on your balance sheet, the ratings agencies, they'll give you 0 points for Bitcoin. You can write no liability against it. For an unrated bond, they'll give you more points. For a rated bond, they'll give you even more points. And for risk-free premium collateral, which today is considered a U.S. Treasury, you'll get the most amount of points to write liability against. So it depends on the specific use case. There's no one answer here. And that's why Michael Saylor is out there telling other companies that others would say are more powerful than his. Why is he not? How's he sharing this idea? Why does he feel comfortable with this idea? Because he understands that this marketplace is so big that no one company is going to be able to service the entire marketplace. That's why companies like ours at People's Reserve, we are approaching the problem with a different solution for a different group of companies. Michael Saylor's equity converts into stock. People's Reserve Bitcoin bonds converts back into dollars. So you're always working on dollar terms. So depending on what problem you face as a person or a company or even an insurance company who has to fall within certain ratings in order to write liabilities, depending on what problem you face, there's going to be a different solution for you. And I believe this is why Michael is so generous with his time and energy to teach his would-be competitors how this really works. But MicroStrategy has a first mover advantage on building a strategic Bitcoin reserve. They have, I believe, over 400,000 Bitcoin. The United States of America only has less than 200,000 Bitcoin. China has less than 200,000 Bitcoin. So he is one of, besides Satoshi wallets, which we don't think are ever going to get unlocked, he is a holder of one of the largest amounts of Bitcoin in the world. So the more and more people that start to offer these products, an amazing thing happens. This is, and you find this in Bitcoin a lot, these positive feedback loops, especially with a Bitcoin bond. So everybody knows that the Fed went on a demand destruction campaign, and they wanted to slow down the economy by raising interest rates. So they wanted to slow down spending and investing, and they wanted to increase saving. What strategy did they use? They wanted to raise the interest rate. Why did they want to raise the interest rate? Because as interest rates go up, people are incentivized to spend and invest less and to lend that money to the government and to save more. And that slows down the economy. So the higher the interest rate goes, the more demand you're going to have for that savings vehicle. Because the higher the rate goes, the more positive the real rate of return is going to be, and the more incentivized that person is going to be to save. So when it comes to what we see in the marketplace with how interest rates work, and then you look at Bitcoin bonds and you say, whoa, the Bitcoin bond performance is based on the price of Bitcoin, right? In MicroStrategy's case, the price of Bitcoin goes up, the natural asset value of the balance sheet goes up. In People's Reserve case, the price of Bitcoin goes up, while the yield on the Bitcoin bond goes up, because at the end of the maturation of the note, both the treasuries and the Bitcoin are liquidated, dollars are collected, and you get paid dollar yield. So the value, the yield on the note will go up. It's really the price performance of Bitcoin actually determines the yield on the Bitcoin bond. So the price of Bitcoin, which is the best performing asset in the world and is strategically designed, it was engineered to leverage the natural laws of economics and price discovery to drive value into the network. This is actually the source of yield. And when that happens and the yields go up, you get more demand for the debt. And when you get more demand for the debt, you issue more of it to satisfy that demand. But then when you issue that debt, you have to take a portion of that debt and then go buy more Bitcoin. But when you buy more Bitcoin, it forces the price to go up. And when the price goes up, that pushes the yields up. So that you get this positive feedback loop that is created by the characteristics of absolute digital scarcity and how that function plays a role in price discovery, where you get a positive feedback loop of higher yields, more issuances, more Bitcoin buying, higher yields. It's really amazing to see it actually work in play. And I think only really a handful of people in the world kind of understand how this is working right now, but it is working in front of all of our eyes. The proof is in the pudding. MicroStrategy is the best performing stock in the world since 2020. And companies like People's Reserve, we have demand. We have people begging for this product because they need it on their balance sheet. The demand can be seen in the price, and there's no better signal than a free market price signal to understand levels of demand.
And not only is MicroStrategy the best performing stock over the last 5 years since taking on this approach, but they also, have the best performing corporate bond. And I believe, correct me if I'm wrong, that El Salvador, Bitcoin friendly nation, has the best performing nation state bond as of right now. So what are the implications of this positive feedback loop that you just referred to, where the bond market is lending MicroStrategy or anybody that's creating these Bitcoin-backed bonds money, and those folks are then turning around and acquiring the spot Bitcoin in the market or through OTC desks? What is the implication of the global bond market kind of leaking into the Bitcoin network?
Yeah, and that's a great question here. And I think that's kind of like the next big orange pill. I think that the general understanding in the marketplace right now, at least for people who are kind of stuck on the digital gold narrative, for people like us who've been in the market for a while, digital gold's like, that's what we first learned about. It's become so much more than digital gold. It's the reserve asset of the internet economy, the only economy in the world that offers free market interest rates on its reserve asset. And because of that, it is the most pristine form of collateral in the world. And that dynamic kind of makes Bitcoin complementary to the bond market, not at odds with the bond market. I feel like a lot of people thought that Bitcoin was going to destroy the fiat system. But look at El Salvador. Look at what you just said. El Salvador has the best performing TradFi bonds in the world. Why? Well, because they added Bitcoin to their balance sheet. So El Salvador is a government who lends that's backed by Bitcoin. And we are moving into a time where the governments are no longer going to be the risk-free borrowers. Bitcoiners are going to be the risk-free borrowers. So if you have a government that isn't a Bitcoin government, it's not going to be considered a risk-free borrower because it's the equity value of Bitcoin on the asset side of your balance sheet that reduces risk. Debt can't back debt. Equity needs to back debt. And Bitcoin is the best source of equity. It's the most liquid source of equity in the world. And it's programmable. So it's kind of, I believe it's the first discovery of real money. We learned a lot about the natural characteristics of money through gold, but just like we went from a light bulb, from a candle to a light bulb, and from a horse to the horsepower in the engine, and now we're going from paper money, natural money, digital gold, to Bitcoin, and that transformation actually creates this new dynamic in the marketplace where if we get a strategic Bitcoin reserve in the United States of America at the federal level, well, we already know through Dennis Porter and Satoshi Action Fund and other lobbyist groups that these states are already making moves to get a strategic Bitcoin reserve. So it creates another flywheel where the federal government has a strategic reserve. That's going to incentivize other nations to have a strategic reserve. We recently saw an article come out that Russia is now talking about establishing their strategic Bitcoin reserve. Maybe some of the BRICS nations are already doing that. Maybe gold is a trick. Maybe gold is a distraction, a sideshow, and they're already accumulating Bitcoin. I think nation-state game theory is already underway, and the United States kind of projecting its plans is not that good of a strategic play. But we already have the most amount, so that's a good that we have the most amount. That gives it an advantage. But we need to get that strategic Bitcoin reserve on the federal level, which then starts it on the state level. And then when you get to the state level, I think something that people aren't talking about, but that is really important right now, is that you're going to see that the state's balance sheet is not a city or a municipality balance sheet. Those are separate entities. So it's not just the states who need a strategic Bitcoin reserve. Cities need a strategic Bitcoin reserve. Municipalities need a strategic Bitcoin reserve. Small and medium-sized businesses need a strategic Bitcoin reserve. People need Bitcoin on their balance sheet, which is your strategic Bitcoin savings or reserve. And this is going to be a catalyst in the marketplace where all value, some asset classes will continue to be demonetized into Bitcoin, like real estate, where real estate is absolutely crashing against Bitcoin. But when you look at the bond market, when you create a hybrid debt equity note on Bitcoin, and you combine Bitcoin as money, as a tool, with currency, which is fiat. It's fiat currency. It's not fiat money. Currency is a medium of exchange. Money is everything that a currency can be, but with store of value. And you can't store your value in fiat currency, but you can store your value in Bitcoin. So when you bring these together, it actually strengthens the marketplace. I can see a world where the dollar actually is strengthened. Donald Trump, when he announced the strategic Bitcoin reserve, something went over everybody's head. He also said that he would expand the dominance of the dollar through stablecoins. Well, how's he going to do that? I think that the administration might be a few steps ahead than people really understand. And I'll take this second to plug myself here, and I appreciate it because I had the honor to be nominated to serve on RFK's Council of Economic Advisors. So if your listeners could go check out my content and cast a vote for me, that would be much appreciated. And what I promise you is that if I get onto that council, I will be a voice for Bitcoin because we don't only need the strategic Bitcoin reserve. The strategic Bitcoin reserve comes with handcuffs. Every Bitcoin that's added to the strategic reserve must be held for 20 years. If you sell some of your Bitcoin, you can only sell 10% at a time. The proceeds from that sale must be used to pay down the national debt. Those are all really good things. I don't have anything against those things. I think we need the strategic Bitcoin reserve with those specific policies. But we also need not to just be playing checkers here. This is a game of financial warfare. We're playing chess, and we need to think 4 and 5 moves ahead. We also need the Bitcoin recapitalization fund. The Bitcoin recapitalization fund is just as, if not even more important than the strategic Bitcoin reserve. This is the fund that's going to come with no handcuffs that allows us to integrate Bitcoin into our economic, fiscal, and monetary policies. And if I am able to get on that advisory board, I'll make sure to voice those concerns and push for the creation of the Bitcoin recapitalization fund, which if your users are interested in what we can do with that, just check out my highlighted tweets, check out what Bitcoin bonds can do for Social Security, veterans benefits, a lot of different things that are happening in the marketplace right now, where we have negative rates of return. Social Security is declining, VA benefits, health benefits, Medicare, Obamacare, all these things are underfunded. We have $219 trillion of unfunded liabilities. This is a big problem. And that comes that saying, Bitcoin fixes this. And Bitcoin is that asset that the government can print the dollar and spend the dollar into circulation and get more than $1 back. Right now, the US government prints $1 and spends it into the economy and gets less than $1 worth of return. That's not sustainable. That's inflationary. That's the problem we're in right now. But what if they printed $1 and put it into real estate? Yeah, the prices would go up, but now you're causing affordability problems. So that's not a solution. Well, what if you invest that dollar in unlocking some of our assets like oil and gas? This could take years to unlock and bring to market with hundreds of billions of dollars of investment and regulation and law changes required to make it happen. Well, enter stage magic internet money, Bitcoin. It's something that the government can issue debt and buy and get more than $1 worth of return. Bitcoin can recapitalize the republic. Bitcoin bonds integrated into social programs like Social Security, VA benefits can recapitalize those programs. We are looking at the true transformation of money markets. And it all started with the acknowledgement of Bitcoin as engineered money, as the reserve asset of the internet economy and the most pristine form of collateral in the world. I couldn't be more excited that we are alive during this time. It's amazing to see.
So are you suggesting that there's an opportunity for the United States to use Bitcoin-backed bonds to raise the capital in order to reach, there's various proposals out there, but Senator Lummis's proposal is 1 million Bitcoin?
Yeah, I mean, I think the United States government should be accumulating Bitcoin. I think because you can print the dollars, but you can't print the Bitcoin. And right now, right now people don't really understand what's happening, but in the long run, it's going to be a race to zero. Countries are going to be printing faster than you could imagine to buy Bitcoin, because when they print and buy Bitcoin, it actually, like El Salvador, that bond, their best performing bond, well, the bond is a currency. It's a derivative of the value of the country. So when they issue that's probably why they're going to wheel back this forcing merchants to accept Bitcoin. That's part of this IMF deal, right? They want to raise they want to borrow $1 billion from the IMF. The IMF is saying, well, if you want this money, you can't force merchants and vendors to accept Bitcoin. It has to be voluntary. And people are getting really triggered about that, but that makes more sense anyway. Things should be voluntary anyway. And when they make it voluntary and borrow the $1 billion, and then they buy $500 million of Bitcoin and double their position, and then take the other $500 million so that they can start ripping gold out of the ground and selling that into the marketplace to buy more Bitcoin, their debt actually becomes more valuable. Their debt becomes more desired, because as the asset side of your balance sheet accumulates Bitcoin and then Bitcoin accumulates value, you become a more credit-worthy borrower. And that's the dynamic at play. So El Salvador is really the prime example of how adding Bitcoin to your balance sheet can strengthen your creditworthiness and can create attention and demand for your debt. And that's what we're going to see, not just on a small country scale, but on a grand scale, and not just on a national scale, but on a corporate scale, on a small and medium-sized business scale, and beyond that too. Because I'm not sure that the federal government is going to figure this out first. And I know here at People's Reserve, we're talking to a few different municipalities who I think, number one, are going to get their strategic Bitcoin reserves established through law and through mandate before some of the other states do. And then at the same time, they're going to issue municipal Bitcoin bonds. And they'll be able to take a portion of that raise to fund the Bitcoin within the note, and then take the rest of that raise to build out their infrastructure and make their towns nicer and safer and more secure. And we'll be able to reinvest in this country. The incoming administration is all about make America great again. Well, Bitcoin bonds, municipal Bitcoin bonds, and integration of Bitcoin as engineered money into these economic, fiscal, and monetary policies, this is how you recapitalize the republic. This is how you make America great again.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days.
Yeah, and you mentioned it at the top of the show, this idea that Bitcoin is pristine collateral. And, you don't have to convince anyone on this call. We understand that Bitcoin's inherent scarcity, global demand, and 24/7 liquidity make it that pristine collateral. And so I guess my question is, should we expect that Bitcoin and Bitcoiners will eventually have the lowest borrowing rates, the lowest interest rates and cost of capital in the world?
Oh, absolutely. And it's been amazing to watch how Bitcoin has progressed and evolved over time. Because when I first started, Bitcoin was digital gold, and there really was no decentralized finance marketplace. So it was just a digital gold. It was the best store of value that you could possibly own. But what we saw was that some people think they can compete with Bitcoin. See, I'm a Bitcoin maxi because Bitcoin is money and nothing else can compete with it. And if anything's trying to compete with Bitcoin, it's a scam. But that doesn't mean there's other centralized and decentralized ecosystems that are going to be built around Bitcoin in order to empower the holders of Bitcoin. And that's what we see now. Bitcoin has evolved from digital gold to the reserve asset of the internet economy, this decentralized finance economy, where, by the way, you get free market interest rates. Don't let the value of free market interest rates, when you look at price controls, they've never worked, right? When Kamala came out and said, we're going to do price controls, she got a lot of backlash on that, and rightfully so. But what's interesting to me is that she got backlash on that, but where's the backlash to the central authorities that are naming the price of money, which is interest rates, because that's a price control too. So we have a price controlled financial market right now where the price of money is based on a stated anchor rate. Well, in the internet economy and decentralized finance, where Bitcoin is the pristine form of collateral, we have a free market interest rate discovered by the supply of money, the demand for loans, and the perceived counterparty risk. This is how the price of money should be determined. And free market money is always more profitable than socialist money, than communist money, than price controls. And that's why the biggest market makers in the world, including BlackRock, are tokenizing treasuries, because they want access. They want liquid access to these decentralized markets with free market interest rates, which generate significantly more profit than the fixed stated rates that we see in the traditional economy. And that all of DeFi, all of these free market interest rates, they would not exist today if Bitcoin weren't the most pristine form of collateral in the world. And what's amazing is when you think this through and you say, okay, now I can go to a banker and I can show him, I make $200,000 a year and I've been making it for the last 6 years and I have a good credit score. And I promise you, if you let me borrow $2 million, that in 30 years, I will pay you back. I promise. And he goes, okay, no problem. I'll let you borrow at 6%. And you're like, oh, that's not bad. Now you go to a Bitcoin lender and you say, hey, I want to borrow $2 million and I'm going to put $3 million of Bitcoin as collateral. I'd like to borrow against that equity value. What can I borrow at? Oh, so you're putting $3 million of collateral. There's no promise involved whatsoever, because if you walk away, if you default on the loan, I don't have to foreclose on you. I don't have to chase you down. I just sell your collateral to recover my principal plus any penalties, and you can come back and get what's left over. You know what? Okay, 16%. 16%? What are you talking about? So I can go to this guy and make a promise and borrow for 6%. And then I can come over here and have an over collateralized loan, and you're forcing me to borrow at 16%. So the marketplace needs to mature. The marketplace needs to, I guess not the marketplace, the market makers themselves. And that's why we call People's Reserve. We're a market maker for we the people. We are here to make the market, acknowledging that Bitcoin is the reserve asset of the internet economy and the most pristine form of collateral in the world. And when you're going to post $3 million of Bitcoin collateral in order to borrow $2 million, you have significantly reduced our risk. And because you have significantly reduced our risk, that's part of how interest rates are priced. It's not just the supply of money and the demand for loans. It's also the amount of counterparty risk. Well, you have eliminated that risk. Therefore, we can lower your interest rate. So the natural laws of interest rate price dynamics tell us that, yes, as the marketplace matures, Bitcoiners and Bitcoin governments are going to be considered the risk-free borrowers in the marketplace. And those who don't have Bitcoin on their balance sheet, they're the ones who are operating on promises versus secured lending models. And they're the ones who are going to have to pay the higher rates because there's simply more risk.
So what do we have to do to see this maturity in the marketplace and then see these low borrowing rates? And what are the implications of Bitcoiners having access to the cheapest capital in the world? I imagine there'd be greater demand for the asset, but also a lot less selling because you could just borrow against it if you need liquidity.
Yeah, absolutely. And that's the amazing thing at People's Reserve with our Bitcoin bond. The way that a stablecoin bill is structured is that you need cash or cash equivalent backing a stablecoin. So when you own a Bitcoin bond, you literally own cash equivalents. So when you post cash equivalents as collateral, you can borrow against them at a very low rate. It's like the federal funds rate. It's like an interbank rate because you're providing the asset that produces the circulating liability in the stablecoin. So the dynamic that's getting set up here is, why would I be an insurance company who has to partner with a bank who has to then partner with another bank who has a Fed master account and then pay a premium on top of each one of these middlemen when I can just hold the actual collateralized asset myself and then post it with one counterparty like People's Reserve and borrow against it to access that equity and to do it in the cheapest way possible. So what we're really asking here is, what do the economic incentives tell us? And the economic incentives tell us that people are going to gravitate towards a lower cost of capital. And as they gravitate towards that lower cost of capital, this is why we call them the cantillionaires, right? They don't want the system to change because they have access to free money. Not everybody has access to free money. They do. They benefit from the most. They're the ones who get it first and get to spend it with the most purchasing power. And then it trickles down to the rest of us. Well, it doesn't work that way in a Bitcoin economy. In a Bitcoin economy, you can't create free money. You can't create money off of promise. It's a commodity credit market, and it's an over-collateralized lending contract, which means that if you're going to be like Sam Bankman-Fried and you're going to create paper Bitcoin, it might work for a little bit. But when the chicken comes home to roost, there's nothing you can do. There's no such thing as being too big to fail. You can't create more than the 21 million Bitcoin that are available in the marketplace. And if you don't have the money to buy them to settle your debt, you're going to fail. So a lot of people get scared about that. They get scared. Oh my gosh, with a Bitcoin credit market, there can be failure. But failure is what we need today. Failure is what the fiat system is not allowing to take place. When you have a credit cycle, part of that credit cycle is the destructive part of that cycle. The over-collateralized and the mismanaged must be punished. They must be destroyed. And if they're not, then you end up in an economy like we have today, where most companies in the stock market are zombie companies. I mean, these companies are not worth investing in at all. They're zombies. It's scary, actually, the amount of debt that has been taken on within the economy and the ability of these companies to use their cash flows to barely service that debt. But there's been no destructive process. Everything is too big to fail. If we close the word down, no problem. We'll just print money and send it out to you. We're beyond the helicopter money phase, right? The helicopter, once you get to helicopter money, once the government prints money and just sends it to you, I don't care what the reason is, you have now entered the last phase of that currency's life cycle. And because of that, we have been at the highest risk of going from inflation to hyperinflation, because I don't believe there's a mathematical definition like they say in the economic textbooks of 50% month over month equals hyperinflation. No, inflation is hyperinflation when trust is lost, because it's the loss of trust that transitions the economy, the society, whether you go back to Rome or Weimar, it doesn't matter. hyperinflation didn't take place at a certain mathematical point. It took place when people lost trust in the currency. So by starting the strategic Bitcoin reserve, by starting the Bitcoin recapitalization fund, by innovating with new fintech products like a Bitcoin bond, we are actually rebuilding trust. And we can enter into a world where perhaps the dollar dominance can actually increase rather than decrease because we've properly applied a Bitcoin strategy to our economy and to our fiscal and monetary policies. It's amazing to see. It's so exciting because ever since I've been paying attention, it's the first time I've had hope. I've not had hope until this time. I believe Bitcoin is hope. And we are seeing that when markets are hopeful, there's going to be things that can't even be described that happen because the amount of investing, the amount, the saying goes like this, right? You don't change Bitcoin, Bitcoin changes you. So as Bitcoin changes people, it's going to change society, it's going to change culture, and it's going to change it in a way that makes it better and stronger, which includes a little bit of destruction because in that destruction, you get rid of the mismanagement and the over leveraged, and you start at a stronger point. So the economy can start to build from a stronger foundation. And sometimes we'll get ahead of ourselves, but we come back down. And you notice what happens with Bitcoin? Bitcoin gets ahead of itself. It comes back down. But the definition of store of value is that it comes back down to a higher low. So it's fun to talk about the peaks, but the technology is about creating higher lows and increasing purchasing power over time. And a Bitcoin economy is going to be the same thing. Yes, we're going to get ahead of ourselves. Yes, we're going to have drops. But the foundation that we settle at is going to be a higher low than the previous foundation. Right now, in fiat, we just keep going up. We have not revisited that foundation. The problems keep getting worse and worse and worse. And with Bitcoin integration, we can kind of solve these problems before the consequences of those bad decisions take place.
Yeah, very well said. And we're going to get into People's Reserve next. But just to kind of double click on that, to Mason's point about what's it going to take for us to actually see these low borrowing rates enter the market. So I guess when we saw the Bitcoin ETFs come into market, it seemed like the ETF issuers had done their homework because they came in at really low fees, kind of showing that they understand that custodying Bitcoin has a lower cost to actually be a custodian of, and that was reflected in those fees. I'm curious, do you think it's just a matter of banks and other custodian institutions being allowed to hold and lend against Bitcoin, a policy change in the United States that is going to overnight see these low interest rates? Or do you expect them to maybe start with a 8% rate and over time kind of build their way down to maybe a 2 or even a 1% interest rate?
I don't see that at all because there's, for me, as somebody who's been in this industry for 11 years, there's a big difference between the Bitcoin mindset and a fiat maximalist mindset. And the fiat world is designed to extract value from you. Companies like People's Reserve, that's what it's going to take. It's going to take a new generation of companies built by Bitcoiners who understand what Bitcoin is in order to bring this marketplace to fruition. They'll start it at 8%, and then as demand goes up, the interest rate will go up, not down, because their idea is that they're trying to extract value. But in a Bitcoin economy, Bitcoiners are not stupid, right? They did their homework on the ETFs. They knew low fees. Well, Bitcoiners are not stupid. You're not gonna be allowed to extract value from people, and if you do, then you're gonna get called out for it. And then when you're getting called out for it, your brand is gonna get destroyed, and that demand will flow somewhere else, and it's gonna flow to places like People's Reserve, who are built for we the people. We have a Bitcoin mindset where we want to deliver value to you, not extract value to you. You see some other lending products popping up in the marketplace, which are honestly really cool, and I love to see it. You can't pay for this kind of marketing, so it's beautiful that this narrative is now being taken to the forefront because People's Reserve has been here since the end of 2021, and this narrative has been ignored. But now that this narrative is picking up, people start to care. But what you see in those products is that the lender is actually going to benefit as well from the Bitcoin that's integrated into the product, right? So you come to them to borrow, they force you to buy Bitcoin, but then they force you to share the benefits of owning that Bitcoin that they forced you to buy. It's a very interesting concept, but the foundation of that concept is built on a fiat mindset of value extraction. What we're going to see are Bitcoin companies and real Bitcoiners who go to Bitcoin companies. And why are you going to come to us? Number one, because you trust us as your counterparty. Number two, because you're getting a lower rate. And then the final question to that is, well, why would you lend your money to a Bitcoiner at 4% when you can lend it to the government at 5%? Or you could write a regular mortgage instead of a self-repaying mortgage at 6. Why would you do that? Risk. Risk is the ignored dynamic here. There's a reason that the banks write the mortgages and then package them together in a mortgage-backed security and then sell them to the suckers. Because if they wrote the mortgages and they were really that good of a product, they would keep them on their book. They wouldn't package them together and sell them off and get the risk off of their book. They're too risky. So the real problem here is risk. And when you incorporate Bitcoin into the product, it reduces risk significantly. Therefore, we can reduce yields. Bitcoin lending products are actually how you get interest rates sustainably lower. You can actually have low interest rates because you have Bitcoin-backed products without stating the interest rate. If TradFi wanted to state the interest rate lower, that's the only way that they can keep it lower. Then they have to perform all these yield curve controlled magic tricks, whether it's public or non-public. They're doing yield curve control in order to suppress the rates. Excuse me. And when that happens with Bitcoin, they have to suppress the rates because the risk is too high. Like right now, it's the duration risk, right? The 10-year note is paying upwards of like 3.8 or 4%, but real inflation is 10%. So you have a negative real rate of return. They have the natural interest rate. If interest rates were not being suppressed right now, I believe the interest rate would be above the rate of inflation because lenders are not stupid and they want to get a real positive rate of return. And we would see interest rates above 10%. But interest rates above 10% would destroy the banks. It would destroy the insurance businesses, which is 12% of U.S. GDP. It would pretty much destroy everything because they bought all these products during the zero interest rate policy timeframe, where interest rates were really, really stated low and suppressed that way. And now they want to raise interest rates, but they don't want to raise them too far and lose control of the yield curve. So they have to perform all these different things to suppress rates. Rates want to go higher, not lower. They have to state the rate lower. Naturally, rates want to go higher. With Bitcoin, naturally, rates want to go lower. And that's because of the reduction in risk. So I think the proper mindset of the Bitcoin businesses, understanding what they have and how to analyze risk, is really what's going to accelerate the marketplace, because you're very happy getting 3 or 4% APY, especially when 4% is like a long-term historical average. You're very happy getting that with no risk. And you can even take lower if that risk is eliminated in an over-collateralized position. And it's a natural economic incentive that creates a sustainable low interest rate system.
So tell us a little bit about People's Reserve. You're a market maker doing these Bitcoin bonds. And I think I heard on your podcast on My Two Sats, your show, that with Punter Jeff, that there's actually a mix of Bitcoin and treasuries in that instrument. Just talk to us about that.
Yeah, so Bitcoin bonds are basically an 80-20 split. And the first issuance of a Bitcoin bond will be from People's Reserve Financial, subsidiary of People's Reserve Inc. And what happens is 20% of the funds raised, let's say you raise, just to keep the math simple, $1 million, right? So you have $1 million raised. You have $200,000 that goes into Bitcoin and then is contractually held within the debt net. And then you have the $800,000 that goes into a 5-year U.S. Treasury note, which could pump out somewhere around, I think right now 3.8, but for this example, just say 4.5%. What happens is over the course of 5 years, because the Bitcoin bond is a 5-year note, the 800,000 with the 4.5% interest applied turns back into $1 million. So if you lend $1 million into the Bitcoin bond, you have principal protection. So Bitcoin bond is kind of our marketing name for the product. It's really a principal protected note, because whatever principal you lend into the product is protected and backed by the printer of the U.S. government, because the debt portion of the note is U.S. Treasuries. So you're going to get paid back your $1 million. What you're going to be able to buy with that at that time, I don't know. You have to accept inflation risk just like you do with any other debt product. The difference is what's left over is the performance of Bitcoin. And that's why we say it's the price performance of Bitcoin that creates the yield on a Bitcoin bond. Because if the price of Bitcoin goes to zero, then your 800,000 turned into $1 million. The Bitcoin's worth zero. The note matures at a value of $1 million. Well, you invested $1 million, and 5 years later, you got paid back $1 million. But Bitcoin went to zero, so you got 0% APY. But what if the price of Bitcoin goes down, say, 50%? Well, the $200,000 worth of Bitcoin turns into $100,000, and now the note matures with a value of $1.1 million. Well, 100,000 divided by the million is the 10% divided by the 5 years. In simple interest terms, that's 2% APY. If Bitcoin price stays the same, that's 4% APY. But what if Bitcoin does what people like you and I believe it's going to do, and it continues its 60% CAGR, or even that CAGR gets cut in half to 30% CAGR? Well, at 30% CAGR, you can get 20% APY. With 60% CAGR in 5 years, the price will be 10 times higher. That 200,000 will be worth 2 million, and the bond would mature at a $3 million value, a 200% gain over the course of 5 years, or in simple interest terms, 40% APY. So that's how the bond is structured, and that's the initial version of the bond that will be released. But we're also talking to cities and municipalities. So in Florida, here in Florida, Florida has a AAA bond rating. The United States federal government recently had their bond rating reduced. Their credit rating was reduced. So Florida actually has a better credit rating than the federal government. So in the state of Florida, let's say like a city like Sarasota, they would be able to issue a municipal Bitcoin bond. So the debt portion of the bond wouldn't be a U.S. Treasury. It would be a debt note from the city of Sarasota. But the city of Sarasota has a AAA bond rating. So it's a very secure form of a debt note that you could invest in. It's the municipal bond market. Well, the municipal bond market doesn't really push a lot of volume. There's not a lot of demand there. But when you incorporate Bitcoin, you can get significant amount of demand, especially from Bitcoiners like us who want to lend into a Bitcoin product where the counterparty has a AAA bond rating. And we're going to see whoever issues that bond. See, we're the marketplace. You come to us, we will help you structure the bond, and we will help the issuer structure the bond. So we have a specific company that will issue U.S. Treasury Bitcoin bonds. So if you want the U.S. Treasury to be your counterparty, then you would buy that Bitcoin bond. But if you want the city of Sarasota or the state of Florida or the state of Wyoming to be your counterparty, you could buy that version of the Bitcoin bond. And depending the yield that they pay on that note, the proportions can change. So if the credit score is a little bit lower, like let's say there's a country in South America that just discovered quite a bit of oil, and they're tired of partnering with big oil companies and giving them the big bulk of the profit of their own national resources, and they want to issue a national Bitcoin bond. Well, they can issue their country's own debt, which would be at a higher rate. Maybe it'd be at 5 or 6 or even 7% because they don't have a AAA bond rating. Maybe they only have a AA or an A bond rating. So you have to, it's really up to the investor. It's up to the business. It's up to the corporation and who they want as their counterparty. But for People's Reserve Marketplace, we are the domain that connects the lenders to the borrowers. We bring the Bitcoiners to the issuers and the issuers to the Bitcoiners. We help the issuers structure the bond, and we make sure the bond is secured because we don't want to bring our community of Bitcoiners and lenders into a crappy product where they could default on that debt, and then you're only stuck with the Bitcoin where you could take a principal loss. So these are the type of things that we're working on People's Reserve, which we couldn't be more excited about, because when you integrate Bitcoin into debt, just look at El Salvador. Nobody thought El Salvador would be where it is today. Nobody thought the IMF would be lending them money again, but they're happy to lend them money. They have to lend them money. JP Morgan has to increase their credit score because the asset side of their balance sheet is growing at a pace that's faster than the liability side of their balance sheet. That's the opposite of the United States of America. Our liabilities are growing faster than our assets. We cannot get the economy to grow fast enough to have assets outpace liabilities. Therefore, our credit score is being reduced. In El Salvador, is the opposite. The asset side is outgrowing the liabilities. Their credit score is increasing. So we're going to see when you when you add Bitcoin to your balance sheet and then you integrate it into your debt products, you're going to be able to create demand because you have a lower risk, higher reward product. And to facilitate that marketplace, we couldn't be more excited.
Are these products available now, and where can folks find them?
They are not available now. We've been building for the last 3 years in stealth because we wanted to maintain first market mover advantage. Unlike a lot of Bitcoin companies, I actually contractually assigned my intellectual property to People's Reserve Inc., and they put me under NDA. So this was something we decided to build here in the United States. We'd probably be live already if we built offshore, but I'm a patriot. I'm a constitutionalist. I believe in this country. And it was a very hard decision to make 3 years ago, especially with the war that was going on. But finally, that headwind has stopped. And I think when the new administration gets in, that headwind is going to turn into a tailwind. And things are going to be becoming not just easier, but a lot more fun to be able to be here in the United States and headquartered here in the United States. So it was a tough decision to make. It cost a lot more money. It took a lot more time. But I think our strategy, our go-to-market strategy is strong. and we're going to take the market by storm. And we believe that economic incentives are what create customers. Our products speak for themselves in their performance. We don't need to sell you or convince you on why you need People's Reserve. You need People's Reserve because the math tells you that you need the People's Reserve marketplace to help you get real positive rates of return and to help your business get into a stronger position, to help your insurance company not have to deal with having to increase prices and lose customers, to help nations get access to liquidity that they otherwise wouldn't have just based on a regular bond that's not really backed by anything except promise. This is the future of finance, and it's being built around Bitcoin equity.
Well, I love it. I think this is a good place to wrap, and I'm sure a lot of folks are going to be coming your way, especially given our audience. And, all we do is talk about Bitcoin and Bitcoin treasuries. Also very happy to see that, you're building the company in America. Big fan of that. So props to you. Clearly the low time preference ideals are, running through you and your business. So I'll leave it with, give the folks a place to follow you personally, where to find you on socials, any YouTube channels or anything. Feel free to plug them.
Absolutely. Well, thanks so much for having me. It was great. I hope once we go live, I can come back and we can go even deeper. I know time went by so fast, I didn't even get a chance to talk about our self-repaying mortgage, but that's a product that the marketplace is just as excited as about, where we integrate Bitcoin into that mortgage product. So if you want to learn more about me and what we're building at People's Reserve, you can follow me on X at CJ Konstantinos, and definitely make sure to follow People's Reserve on X at People's Reserve. And then from there, you can find everything you need to see.
All right. Cheers, guys.
Thank you.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.